Welcome to the StockOptionAssassin.com's free Trade of the Week video. Today is Monday, February 24th, 2014. Just FYI, last week we did not do a Trade of the Week, and there's two reasons, and I want to kind of go over that right now. First of all, the first reason is last week was a shortened trading week. So here's Monday. So last week there was only 4 days in the of actual trading. And so that's the first reason we didn't do a trade of the week. And the second reason, which is probably the most important, is that it was actually options expiration. And whenever you combine kind of an OPEX week with a shortened holiday week, you tend to get kind of a choppy action. And so we were already kind of at resistance, or we were trading around the 1840, 1850 level. We were kind of chopping around underneath there. And today we're actually starting to break out. So that's what we were kind of waiting for. I didn't want to sit down a trade and then all of a sudden start trading back down to the bottom of the range. I wanted to wait and see what the market is sort of telling us. Now today, possible that this is, this turns, a little pullback here. We're getting a little selling in the afternoon. I'm doing this video. We still have about 25 minutes left of the day. But as of right now, the market is starting to break its recent consolidation. This is actually a tight little range. If you look at this on the weekly chart, you can see this is the doji we put in last week. So again, you don't want to take a trade that you're at potential resistance. You're at a doji at the top of an uptrend. Let's see if we can get the breakout, and then we look at bullish play. So that's kind of why we waited for issuing any new trades. We actually, in our service, did not issue new trades last week as well. We took profits. Partial profits in some trades with the idea that we think we're headed higher, and so that's kind of what we're doing in the service. So the trade I want to look at today, we actually entered a position. Members were alerted to this trade early this morning, about 30-45 minutes into the session. And what I've been looking at is AIG. So two things I like about AIG. First of all, it came into its 200-day moving average. Slightly underperformed the market recently, but now it's sort of consolidating under its 50-day moving average. And also, this is actually two more things that are kind of important to me. So first, earnings were on, what day was it? You can see on the 13th, which was a couple weeks ago. So after earnings, the stock has had a relatively positive reaction. They beat earnings. The fundamentals of this company are strong, but the price and volume activity is relatively low. So what that's telling me is that the fundamentals are good, that there wasn't any ghost in the closet or whatever after earnings. The reaction was good, and then it went to consolidation mode during the typical option expiration week. So then during the consolidation phase, we had this squeeze indicator, which actually had 2 dots red last week, and today it's actually firing long, meaning we expect a volatility breakout to the upside because we're breaking out and the squeeze fired long. So we entered some option trade today with call options. Let's look at the option chain real quick. Here's the option chain for AIG. We went with the March 50 calls. We got in for about 75 cents, so we're up a couple cents on the day. Not a big deal. And we went with a no-stop mentality on this, and partially because what the squeeze, if this is going to be a true volatility breakout, like I mentioned, then the squeeze is going to keep moving higher. We're going to break above that 50 and look to retest the highs, which will put us in the low 50s. And if that plays out, we would be looking at about 100% gain over the next week or two if the market can continue to break out. So, it's tricky sometimes when you have these lower price stocks, and lower price, I meaning $50 and under. This is right at 50 bucks. So when you have an out of the money option that's less than $1, to me the volatility is too great in the option to really put a stop on it, because we could dip tomorrow and this thing go down to 60 cents and then it break out and have a huge reversal. So I don't want to put something like a 10, 20, 30% stop on this, because you're going to get stopped out at some point. So I want to participate in the rally, but I'm going to position myself knowing how much I'm risking per option. In this case, I'm risking 75 cents per contract. So I buy that that number of contracts. So also see we have a pretty big number of volume and open interest here at the 50. So so that's the trade. You can still get into this tomorrow. We expect the market to kind of continue to push higher. Selling off a little bit late in the day, but the market is up and is making a new all-time high today. And that's our trade of the week. You guys have a great night, and we'll see you at the next update.